the US turning benevolent to India on tariffs, if only wishes were horses. But that's on a lighter note. No. Let's keep it serious for now. Mayuresh Joshi of Angel Broking is joining in. Mayuresh, first stock to you would be UPL. 16% rally after serious drubbing last several months. So bounced from the 52-week low. What would you do with the stock?
So afternoon, Sulbi. So if I'm holding on to the stock, I clearly hold on. Yes, I think from a near-term perspective, you might actually see debt levels going up because of the $3 billion debt that the company is taking on at this point of time. And that also does take its net debt to EBITDA levels higher. What it also does probably from an immediate short-term perspective is reduce its return ratios because of the implied interest costs which will be far higher over the next few quarters. But then there is the offsetting effect in terms of the synergies coming in from day one. So as the management has put forth $125 million year one, you're probably looking at $200 million. And again, I think the kind of benefits that they'll get specifically in terms of the geographical locations, Eastern Europe, Russia, the product mix, and the exposure probably to LATAM probably getting reduced in terms of a geographical risk, specifically in terms of standalone UPL operations. I think the European operations will now contribute close to 24% for the merged entity, and LATAM staying at 32%. So I think the earnings growth should probably come through. Obviously, I think there are vagaries in terms of how weather patterns and all can develop over the next few quarters, and that uncertainty always persists with these stocks. But the long-term outlook probably remains robust. The reduction in terms of return ratios from a short-term perspective, I think the markets are probably taking into account more the synergies and the earnings outlook for the stock. So anybody holding on to UPL, clearly hold on to the stock.
Okay. All right, gentlemen, let's take a quick break. We will come back. It's a strong afternoon of trade this Monday. We'll look at the close with the Sensex and the Nifty close to record levels. Mayuresh, just 3 minutes to go. So very quickly, same question to you. Would you treat this as a buying opportunity from a portfolio standpoint or just stay away?
So, Surbi, I think the kind of management that has got put through specifically in terms of the Bajaj Auto management, they're clearly going to go after market shares. And in that respect, the kind of compromise that they'll do on the margins is very, very well epitomized in the kind of numbers that we've seen. Now, in terms of their product mix itself, I think you're probably looking at a very healthy mix coming through over the next few quarters. The Pulsar sales still holding out. The Discover 125 to disappoint as per their statement that they put forth. But I think the unit sales for a Discover, the entry-level bikes where the discount factor was pretty high. I think that has probably impacted margins along with input costs going higher. So from a long-term perspective, again, I think the export market's holding out pretty strong for Bajaj Auto. So I'll wait for declines probably to come on these counters. I think the kind of commentary has probably led to a fall in all other two-wheeler stocks as well. But I think the demand in terms of discretionary patterns should hold out. The volume growth should be reasonable and the margins should probably normalize over the next few quarters. But again, I think I'll wait for declines. Hero MotoCorp probably remains one of my preferences.
So apologies for that. We do have the lines through with the Vijaya Bank management. So we'll thank our market experts on that note. Right now it's time to get some corporate conversations going. Vijaya